Okay, good day. So now we are going to talk about fair value gap. Fair value is basically, keep it in simple. Fair value gap is basically a gap within the market. Fair value gap is basically internal liquidity. So liquidity is where we are looking to tap into the market for entry. And one of the entry model is fair value gap. Fair value gap is basically internal in liquidity. Fair value gap consists of three candles. You can label it as first, second, third. We have bullish and bearish fair value gap, and we have inverse fair value gap. We'll be talking all about those. So now a bullish fair value gap. There's three candles going up. So here we have one candle, two candle, three candle. So this three candle pattern, we look to identify if there is a gap within the third candle. Whoops. So we look for there is a gap. Let me go back. So we look for there is a gap. So we are looking for, we're doing an example on the H1 time frame. So right here we have the candle high and we have the candle low. Right here we have the candle low. So within here we have a gap, and that gap is called a fair value gap. So that is liquidity. That is where the market have a displacement, where buyers push the market up based upon high volume, and we have break the swing high. So this swing high break by this candle right here. So now we have confirmed that this fair value gap internally in liquidity push the market up based upon volume. So what volume is what push the market. So the volume push the market up. So right now this fair value gap is our liquidity entry. So we use this as an entry model. And right here now, right here we add 1, 2 candles, 3 candles. So right here we add a fair value gap. The second candle, the first and the third candle high and low are not touching, so that's a fair value gap. So this right here now, this one right here is a inverse fair value gap, and it is where we are looking for our entry. How do we look for entry? We go and we place, we zone it, we zone the fair value gap. We zone the fair value gap, and then once we zone the fair value gap like this, let me use something different. Once we zone the fair value gap, like this, I'm not a techie person. So once we zone the fair value gap like this, that we are doing, once we zone the fair value gap, Once we zone the fair value gap like this, what I'm doing, so right now you can see that there is a gap between the top line and the bottom line. You realize that there is a gap, so that's a fair value gap. So we want to extend the zone. So now we see that we have a fair value gap, so we want to know that if we are in a downtrend or we are in an uptrend. So clearly we see the price are making, we see that the price are making higher highs and higher lows. So right here now, this right here is our fair value gap. So we want to see price pull back down into our fair value gap and create and give us an entry. So now on the current time frame, we want the MACD indicator, the histogram bar and the signal line to be above the 0 level when price come back down there. So how do we enter? Now we will go on the lower time frame. We will go on the lower time frame. So this is a H1, so we go on the 5-minute time frame. What we want to see on the M5 time frame, we want to see what? We want to see price break above the last seller's candle, the last buyer's candle that when price came into the fair value gap. So this is known as a change in the state of delivery. In future videos I will explain change in the state of price delivery, or we can say CB1 break. We want to see a CB1 break. When we, for example, now in retail term, which is simpler, we want to identify a job-based job, the second to last job-based job. When price come down into the zone, we want to see a job-based job. We want to see a job-based job. Once the price come back down into the zone, we want to see a job-based job. Once we see a job-based job, then we zone off the last or the second to last base candle inside the pattern of the job-based job. Then now we want to see that M5 candle close above the line of the base candle. The base candle now we would place a horizontal price line at the close price of the last buyer's candle. So once we do that, we want to see price buyers closing above that horizontal price line of the close price of the base candle. And once the price close above, then now we want to see fair value gap, or we want to see a base or a seller's candle form inside that candle that break above the base. So now we are looking for a rally base rally for us to enter. Remember now, when we are doing a buy trade on the lower, we will identify a liquidity level, which is a fair value gap, or a fair value gap, and we want to be inside a trend, and we can use MACD as an example for us to show us that we are in a trend. So right now, when we have the fair value gap, we want to confirm on the 8-4 time frame that we have a rally base rally. So right here now we have the lowest low, so right here we have the lowest low, then we have a base candle, then we have another base candle and another base candle. So this base candle right here is a protection of the fair value gap. So when price come back down into the fair value gap, which is visible on the H1 time frame, then on the M5 we want to identify a drop based drop that come to the zone of the fair value gap. The fair value gap is liquidity. Where we want to enter? We want to enter the fair value gap, liquidity. So when the price come back down there, we want to identify on the lower time frame, example M15 or M5 time frame, we want to identify drop base drop. So the base candle now, we use that to identify we have a breakout to the upside that show that buyers took the last supply based upon volume. So when the price pull back into the zone, we want to see a drop base drop on the M15 or the M5. Then now we place a horizontal price line at the buyer's candle Let me see if we can find an example of where we had one of those type of setup. There's a lot right here we can use, but I want to find one that came out of the zone. Trying to find a fair value gap where we get a setup like that. Here we have a drop base drop. So right here now, this base candle, let me clean up this base candle. Let me clean up the chart. This base candle right here, so we break above it and we create this fair value gap right there. You see the price pull back, goes up, down, and right up.